If you don't have access to US stocks, you're really missing out on probably greatest wealth creation ever.
You'll essentially be helping them tokenize their existing products.
The main value is what happens after tokenization, right? So actually making it liquid, usable, composable on chain.
I guess you need both roles from, the financial experience, but also roles that are more crypto native.
The team needs to have three things. The first, you have to really know finance. Second thing is you have to be really good software engineer. Third thing is you have to be crypto native. Starting a company in a bear market or raising money in a bear market, that's not a bug, that's a feature. If you look at the great tech companies, all of them started during bear market.
Hi everyone, and welcome to Onchain Honestly,
a podcast about what actually works in crypto as a business.
We're long-term believers in this space, and we want more honest conversations about what's changing and why.
So we explore real models, practical outcomes, and what it takes to build something that lasts.
Welcome to the podcast. Today we are joined by Iggy Ioppe, Chief Investment Officer at Theo, a platform connecting on-chain capital to global markets. Iggy brings a rare mix of traditional finance, venture, and crypto experience with a career that spans Wall Street, startups, and digital assets. Iggy, welcome to the show.
Thanks for having me. I look forward to it.
So I know that you have been asked this quite some time, but what specific institutional gap convinced you to become a builder again and join Theo? What was the big vision?
So this is the reason I became a builder again is because I saw an opportunity that would allow me to sort of bring together all the different things that I've done in my career. And maybe maybe a quick intro here, because I started in private equity. I was working for Bain Capital in Boston back when it was only buyouts. And then I went to Harvard Business School. I started a SaaS company there, moved it to Bay Area, the Silicon Valley and San Francisco, and then we ultimately grew to 300 people and had a successful exit, which selling, in the mobile space. And then I went back to investing, but on the public equity side, I was covering tech stocks and internet software, fintech and payments and all that stuff. Then I broadened it further and ended up running proprietary trading in long-short equities at Credit Suisse, which was like a global team, and it was a couple $1 billion books. It was a pretty serious operation. Then started my own hedge fund with a partner, where we're investing again quite a lot in tech around the world. Then when we converted the hedge fund to our family office, then I incubated other funds, real estate fund, quantitative market making firm, some other things like around what was called big data at the time that didn't work out. So it was like this huge variety of different things. And then most recently I was running, I was co-head of Polygon Ventures, crypto VC, and then so throughout my career I saw I was more on the investing side, but then I saw all kinds of problems in terms of the plumbing that was mostly created. We'll get to it, but 50, 60, sometimes 100 years ago in the traditional finance, and sort of the opportunity with Theo specifically, their vision, and also to work with tokenization, to work with what we call real world assets. That's where I could bring all of these different experiences together. So Silicon Valley tech, Wall Street, finance, actually, being a finance investor, and then, the crypto side. So it was sort of perfect for me. I could see myself spending, the rest of my career, another 50 years, hopefully, working on this thing.
Iggy, so now you are with Theo, Chief Investment Officer. Can you briefly walk us through the product set that you currently have?
Yeah, so the general vision is to give on-chain capital access to the world's greatest wealth creation engine, which is the U.S. financial market. And there is 8 billion people in the world. Out of them, maybe 1 billion have access to these sophisticated financial products. And as you know, right now, U.S. stock market is like the vast majority of the global market capitalization. So if you don't have access to U.S. stocks, you're really missing out on this wealth creation, of probably greatest wealth creation ever opportunity throughout human history. So we're starting with less risky things, and then progressively and very deliberately grow from there, right? So this is what I call get right first, or GRF, compared to GBF, which is get big fast. So we definitely focus on get right first. The first product is TH-Bill, which is tokenized treasuries on chain. So that's, there's other people that do it also, not quite well, Ondo and BlackRock and a few others. So it's a very similar product, but it's, strictly better product than stablecoins, because you can do all the same things you can with stablecoins, but you're also getting paid a risk-free rate. So you might as well collect that. So the first step is, a lot of people use stablecoins. Are like, oh, I'm so glad to be in the US dollar, not in like my local currencies. It's maybe like inflating. And on top of the stablecoins, of course, are like composable in DeFi. You can send them, very, very quickly and instantly and at a low price. So all those benefits, but then, so all of the same things you can do with tokenized money market fund, and you also get paid. So right now, people use stable coins are kind of getting a little bit screwed, because the issuer of stable coins is collecting right now. It's a 3.65% still, quite substantial yield. When you're talking $100 billion, that really starts to add up. So that's the TH bill. The second product we'll launch right now primarily as a building block for the third product. The second product is TH Gold, which is tokenized gold. And this is, for the first time in human history, 6,600 years we've been using gold as a store of value. This is the first time that you actually get paid for investing in gold, as opposed to it costing you something. So that, we can get into more specifics there. And then the flagship product right now is THUSD, which is a yield-bearing stablecoin that, with a little bit of an increase in, let's say, risk or volatility, it pays you a high single-digit rate of return. So it's much more competitive with, it's actually, higher yield than most of the things you get from like tier one protocols on chain, and frankly off chain as well. And so we're using this like gold cash and carry trade, which we can get into as well. And then so those are the three. So TH Gold is the main focus right now, because I really think it's a super compelling product, and also it hasn't been offered to the public in an easily accessible format. It's been basically the domain of hedge funds, and I'm very familiar with it, but you couldn't buy it at extremely low cost as a member of the public. And especially on blockchain, where you can access it from any country, anywhere, 24/7, without minimum. So the THUSD, I'm pretty excited about. We're actually gonna. This is. I want to make sure I don't forget. But by now, I was hoping I could announce a partnership with a multi-trillion-dollar institution that you guys would be very familiar with. But because it's so big, there's so many approvals for like the press releases and all that. It hasn't come through yet, but it's going to be coming in a few days. So this is a multi-trillion-dollar institution that haven't done, and I tried at Polygon to do a deal with them, and other greater men have tried to do it also, and they haven't been ready. And it's the first time they're doing tokenization, and we're actually a launch partner. So that is like pretty insane.
So you'll essentially be, again, without naming names and going into detail, you'll essentially be helping them tokenize their existing products.
Yeah, so they actually, they even do the tokenization themselves. So it's more of a trend. The tokenization engine itself, I view it as a commodity. So we also work with like Standard Chartered and Wellington, and they have, so Standard Chartered have like created Libera, which is like their tokenization subsidiary. There are many providers now that can do tokenization, even white label solutions. You can just get the software and like label it yourself. So they do the tokenization. We do the on-chain part. So we pick up where tokenization. We also have tokenization engine because in some cases, like for our own strategies, obviously we tokenize them ourselves. But the main value is what happens after tokenization. Right, so actually making it liquid, usable, composable on chain. Actually using the blockchain for all of its capabilities.
Of course, and then definitely thinking about distribution. and working with the right partners for distribution, or like developing your own distribution channels. But look, we'll definitely get into it, and we have so many questions in mind. Even when you were walking us through these three products, so
All
many
right, let's
things
go. Yeah.
emerge in our heads. But Iggy, since this particular show is really about the commercial, the business side of things, let's probably, maybe even high level, talk about the business model of Theo. So what exactly are you generating revenue from? What's the business model there? Are you profitable so far? Are you still at the growth and scaling stage, which I assume you are, but can you talk a bit more about the business side of Theo?
Yeah, we are profitable because we're generating revenue. I mean, so TH Bill reached over 200 million, and even though it was really a test product, like I said, it is very useful product, and uh, this space of like treasuries on chain is going to grow massively, just like stablecoins will grow, and then the treasuries on chain will take share from stablecoins because it's a strictly better product that pays a risk-free rate. So we've got, even just for the test product, to over 200 million. And for THUSD, we again wanted to make sure, in the spirit of GRF, or get right first, we wanted to make sure that all the rails, all the technology is like fine-tuned. So we capped our initial vault, the Genesis vault, at 100 million, and we thought it would take a week to fill it. It got filled in 8 hours. So definitely, like for the differentiated product, like we have, there is quite a lot of appetite among on-chain capital, because right now, we'll get to it, but it's very hard to find yield on chain compared to 2021, for example. So yeah, so we're profitable, and we're targeting in let's say in a couple of years to have tens of millions in revenue. I would say right now we are choosing to pass along most of our profits back to our investors. Just to really in the early stages to help building, but over time that will there will be like a fair division between the investors and then the token holders.
So do you imagine yourself somewhere close to, say, Securitize? I think they've just released their latest quarterly earning report, where they say they earn, I think it was like 17 million for Q1 of this year. So is it somewhere around that?
No, I think Securitize has been in business too. They're one of the pioneers in the space. So we are, this is what I say when we stand on the shoulders of giants. The Securitize is not a giant, to be clear. The giants I'm talking about are Franklin Templeton, BlackRock, Apollo, people that were early in Hamilton Lane, that were early in tokenization, but with help of, quite often, Securitize, because they're one of the first, if not the first, tokenization platform. So I think they have a couple of billion, maybe, in TVL. But the problem with this, that's a second generation of RWAs, and we can cover the first generation at another time. But I'll skip straight to the third, which is the second generation. A lot of the time, you tokenize things, you put them on chain, and then you don't use the chain for a variety of reasons, because it's sort of conservatism, or you don't really quite have the crypto native like expertise, and also on chain changes really quickly. Like hyperliquid has really emerged, and we're very hyperliquid aligned. So that wasn't a thing like a year and a half ago. So we go to where the liquidity is, and we're also very quick in terms of integrating with on-chain. So there's the team is very crypto native. So I would say a lot of these early, like second generation institutional tokens, the kind of whitelist, KYC, KYB, accredited investor, all that stuff. So they sort of have their market among the accredited investors with the holding periods and such. But that's not really an on-chain market. So it sort of sits on chain, but it doesn't use the chain. So it's all. So our sort of revenue model is definitely asset management fee, and so some small percentage of the yield that our investors are earning, but it's also sharing the trading fees with the exchanges. So if you look at what I call velocity, which is the trading volume divided by TVL, we are pretty much number one among all RWA protocols. So we really like the North Star that would say, which is our products, they have to be liquid, they have to have accurate price discovery, they have to be composable DeFi. Like that's actually is in the numbers already. So I would say we're more focused on delivering on the vision, which is making sure that it actually works and uses the blockchain, that is accessible, that people can self-custody. And if you look at the RWA space now, a relatively small portion of it is actually truly composable on chain.
So what I'm hearing is that not only will you, Kazi, sorry, I just want to confirm that with Iggy. So not only will you still be working and partnering with those large like asset managers and institutions, but your differentiation point is really in making those assets truly composable and usable in broader on-chain finance world, right? So that's where you'll be earning more versus this second generation tokenization platforms and products that, as you call them.
Yeah, exactly. So in fact, like I said, so we are already partnered with two basically $1 trillion or so institutions, which is Wellington Management, been around for 100 years, and Standard Chartered been around for more than 100 years. So they're quite big, and we're using their own tokenization engine. So we're specifically partnered to distribution is only part of it, right? Distribution is sort of a one-time thing where you have people that want to invest, they have on-chain capital, and you put them into various investment products. But then you also have, building markets, building liquidity, uh, making them composable in DeFi, allowing even, things like looping, fractionalization, allowing those things to be used as collateral, which is all that's already in place for THBL, for example. And it's, in the final stages with THUSD also. There are like active market, there are DEXs, there are borrow lend platforms. So, for example, when we launched THUSD last summer, within 2 weeks, we were on 4 blockchains and 20 different DeFi protocols, including Hyper EVM and several DEXs on top of Hyper EVM. I mean, that is just completely crazy. Even at Polygon, when I was there, like a lot more resources. When we did the first tokenization deal with Hamilton Lane, it took like several months to implement it. And again, this was what I gently call tokenization theater, where you put things on blockchain, you tokenize it, you issue a press release, you count the TVL, but then you don't actually use on chain. So it was actually much less of a heavy lift, much lighter lift, and yet it took quite a long time. So the engineering team here is insanely good, and of course we benefit from permissionless nature of blockchain. So you can make those integrations much faster, but the sort of the on-chain team at Theo is just insanely fast.
Yeah, that was exactly the question I wanted to ask you previously, because we touched briefly also upon teams and building companies, is how have you built the organization around that? Because I guess you need both roles from, deep financial experience, but also roles that are more crypto native.
Yeah, so that's actually we talked earlier in terms of like why was I attracted to this? Why did I become a builder again after like more than 15 years? So I always had this vision of tokenization. I mean, so Larry Fink, who is more famous than even all three of us put together, he said tokenization is the future of finance. And Scott Besson, the Treasury Secretary, said that stablecoins are growing from 300 billion to 3 trillion. And I think Standard Chartered, which is actually our partner, they have like 17 trillion for stablecoins or something like that. So it was pretty clear. If you look at FedWire system, which is how you send bank wires, it was originally created in 1918, and it was like refreshed in the 50s or 70s or something like that. So just like the whole fintech industry, which I've been investing in and very familiar, it's just a different UI, right? But the plumbing underneath is still the same old system. It's ACH, it's FedWire, and it's credit cards. MasterCard was created 60 years ago. Visa was created 50 years ago. And so, these are not, they're like long overdue for an upgrade. So the vision was always very clear. But in order to execute on it, in order to execute on RWAs on chain, the team needs to have three things. There you go. Make sure it's in the frame. the first, you have to really know finance. And so the three founders, they were quantitative market makers, which is, now it's like the smartest guys in the room these days. Back in my days, it was investment bankers and maybe private equity. So they had the TradFi part covered. They were also extremely, and then the second thing is you have to be really good software engineer. You have to be really good at coding and managing AI agents to generate code. And they all have computer science background. And they were obviously, as again, quantitative market makers, quantitative traders, they were building very high-speed, efficient code. And the third thing is you have to be crypto native. You have to really understand on-chain. So when I met them through Polygon Ventures. They were building another crypto project that actually reached hundreds of millions of TVL already. So they had a big, they launched a token. The token was, with hundreds of millions of market cap. So they already had a proven success on the crypto side as well. So like I knew that, and we were aligned on the vision of saying, hey, let's put this tokenization theater behind us and go to the next step, which is if you tokenize these real world assets, let's actually build markets for them on chain, just like you do now with crypto assets. All the same things you can do with like wrapped Bitcoin or ETH on chain. You should be able to do it with treasuries, with gold, and with other like yield products, and eventually like all the major financial assets. So we're aligned on the vision, and when they started building, I became an investor right away, and then last summer when they really started scaling and they got product market fit and TH Bill, it was pretty clear it was going to gather, even though we weren't actively marketing it, was going to gather hundreds of millions of TVL. Then I hopped on to help them scale.
Amazing. No, I mean, this is absolutely the right approach, and that's what I'm saying broadly in the market. Like, unless you have a very clear understanding of how a particular capital market, for example, that you want to bring on chain works on traditional rails, there's absolutely no way to properly bring it on chain, right? But then on the other hand, on the other part of the scale, you can't really bring it on chain unless you understand how on chain works. So yeah, it's just it's a good combination of the right talent, right, and this balance between TradFi and native crypto that you need to have inside the team. But Iggy, talking about capital formation for those three products, you briefly touched upon, working with institutions, but at the same time also really focusing on enabling all the three products. I think except for the probably second one, right, TH Gold, which is pretty limited in access at this point. But still, my question is, how exactly did you bootstrap this first liquidity? Did it originally come from institutions, which I assume it did? But can you just talk a bit more about this initial liquidity strategy that you had or the guys had for TH Bill, even before you joined, and then for further products in line?
Yeah, so it will be a similar strategy for TH USD and then TH Gold, and the things will launch in the future. So a lot of our investors, I mean, I think most of the leading market makers in crypto are on the are investors in Theo. They're like venture arms, and in some cases like people individually as well. So we're very close with like the market maker community in crypto. So we'll make it very easy for them to make market in our products. Basically, like easy to mint and redeem. We don't charge for that, for example. And so that's the kind of the main engine. We also make our own market in some cases just to seed it. But of course, there's a lot more capital when you can make it easy for others to make market. So the primary way is making it super easy for external parties to make market, and then supplemented with our own. So I'd say having the right connection, and then also connectivity, right? So the tech side, like I said, making sure that the product is available at various DEXs, at various borderland platforms, and then at some point liquidity starts to beget liquidity, right? So if there is sufficient volume, if there is sufficient depth in the pools, then people trust the price more. If they trust the price more, then they start to trade more, and then it creates the volume, and you start this like virtuous cycle. This is what happened with the hyperliquid oil perps. because there were actually not there was no oil on chain, unlike gold perps where you had this kind of established tokenized gold on chain like PACG and XAUT. They've been around for 6 years. So the gold perps had an oracle. Oil perps didn't have any oracle. It literally became a self-contained market. But once you had enough volume and enough price confidence, then the virtuous cycle kicked in, and then it grew, and then resulted in like super accurate price discovery with good volumes. And also, you need this is sort of from economics. You need a relatively small number of active traders and active market makers in order to get a fully accurate price. So you don't need hundreds of thousands of people trading. You actually need like maybe even as low as 100 people trading in order to get accurate price. So it's actually like not as hard as long as you work on it and you have the technical foundation, you have the integration, and you seed it with market makers, then it's actually not that hard to create liquidity.
But then talking about different institutional categories of your LPs, who are they? Who is exposed to THBill right now? If we talk about institutions in particular, like did you outreach family offices in particular, or maybe did Wellington Management help on their side as well in terms of bootstrapping those 200 million or over 200 million in TVL that you originally mentioned?
Yeah, so there's two different buckets. There's the people that create liquidity for the product. That's one source of capital, if you will. Right, so they benefit from the borrow-lend activity. They benefit from the trading activity. That's kind of their reward. And then there are, you can call them allocators, the people that actually buy the product itself. And there's a wide range of those. So right now, it's a mix of both, let's say, large crypto family offices, as well as mid-sized crypto and also crypto retail, which is smaller tickets. So, for example, $100 million Genesis Vault on THUSD, we had, I think, 15 or 16 investors that were over $1 million. There were like like 4 big ones that were like multi-million that we actually knew, and we had conversations with them. But all the others, so like 10 or 11, whatever the math is, people came in with $1 million plus tickets that we actually didn't know them. They didn't reach out before. And we were actually trying to figure it out. I'm like, hey, somebody who can invest $1 million into a specific product without even checking is an investor that's worth, having a relationship with. So we were like, over time, we tracked them, most of them down. But because
I bet that was anyway the result of your BD strategy, wasn't it? Maybe they came from a particular distribution partner. I can't believe they came just out of a sudden.
Well, we have, at this point, so this changed, like compared to like a year ago, we'll like have a pretty like well-known brand,
Well, yeah.
pretty
If
like,
you see there was the same LPs as for THBill, then probably, yeah.
Yeah, and also pretty like blue chip background, also. No, some of them were not. In fact, yeah, so we're also doing that work now, which is figuring out who allocated to THBill, whether they have allocated to THUSD yet. And it's like not always the case. So there is some overlap, but there's also a lot of new ones too. So I think it's basically doing a lot of education, the stuff that we're doing now. And then the fact that the team has this like super blue chip background, right? Like I said, the founders, they all work for top tier market making firms in TradFi. They launched $1 billion project before. The fact that we have sort of this, we get blue chip list of backers, even myself, like work in private equity and hedge funds and pro trading. So I think there's quite a lot of trust. So that's for the large tickets. And then there were several thousand, if I remember correctly, a couple of thousand of small ticket investors. They were like as low as a couple of $100. So
was it QAC gated, the Genesis program? Because I unfortunately missed it. Look, I saw the announcement when the cap was already filled, and as you said, it happened pretty quickly. Was it QAC gated? Was it open to anyone? Was there any minimum check, just to understand the full picture?
Was there a minimum ticket?
Yeah.
Not that I know of. Not.
USD.
But THQT, I don't think so. I mean, there were definitely some like I think the smallest that I saw were like a hundred USDC people sending like $100.
Mhm.
So yeah, no, there was no. It was open, right? The whole idea is that we want to make this financial products, just like Wall Street products, available anywhere in the world, anytime, um, anywhere, anytime. So 24/7, right? It's there's like 200 countries in the world. I think 195, 193 UN members and like two observers or something like that. So without through the magic of blockchain, we can make it available in all those countries 24/7 and at no minimum because the costs are super low. By the way, you couldn't do it even 3, 4, or 5 years ago because block space weren't as abundant. You didn't have fast finality, you didn't have low cost. But thanks to like all the infrastructure innovation, this is what I was investing in mostly when I was at Polygon Ventures is modularity, layer ones, layer twos, right? Layer 17, all this different data availability, ZK. So it was infrastructure because there's also bear market, just kind of like a little bit like now. But the good thing that came out of that investment cycle is that now you have fast and cheap blockchains, so you can actually like much more. Like I was a tech investor, so all the VCs, tech investors, they always say like if you're building a new company, it needs to be at least 10x better than the existing solution. So now the blockchains are well north of 10x better than the legacy rails.
Well, they are, but I'm not sure whether we could attribute it to, the blockchain, just, overall development and maturity. But by the way, I wanted to ask if you know Theo's TH bill, how it currently ranks by the number of token holders on, let's say, RWA XYZ. I just want to surprise you with that number if you don't know. It's a good
No,
one.
you can let me
It's
know.
a, it's
I
a,
don't
it's a good
know. Are
number.
they
The
capture?
num Yeah, go ahead.
Well, the last time I checked, it was 80,000 unique holders of TH bill.
Well, which platform did you use for that?
Well, we have our like engineering. They basically
Oh,
ran
that's
a
your own
specific, yeah,
internal data.
yeah,
Okay. Then
yeah.
then you'd need to contact RWXYZ if you're interested to double check it with them because last time I checked, you ranked number three after the T-bill product by Nest on Plume. Then second is Ondo's USDY, and then third
Hmm.
is you essentially. So, but it only counts 4,000 something holders. So we definitely need to check it with them, like on their methodology. But still, it's like number three across probably like some dozens of T-bills, tokenized T-bills products out there,
Yeah.
which again proves your point that not only are you distributing it largely and successfully to institutional players, but also I bet to retail investors as well.
Yeah, no, that's good. I have to talk to the engineering team. We do have folks that work with like the dashboard integrations to make sure they're accurate. So yeah, they may not be capturing the whole thing. And also, where some people are redeeming TH bill to go into THUSD because that's it's a high yield product with basically very very good safety profile. I mean, I hate to use the word, man. Nothing is financial advice, by the way, right? DYR. Uh, but I mean, I do feel it's like quite a safe, quite a small increment in risk relative to the high single digit yield that you could be generating.
I was actually thinking also about when we talk about retail, is that your vision or the North Star that you mentioned before to make, the products available for everyone, everywhere? We do operate in quite highly regulated environments. Are there any challenges that you are facing with offering the products? Or I imagine that you had to still have KYC for the retail and, proper processes to offer the investment.
Yeah, so we follow the same protocol as, for example, like Ondo USDY. So we're not like innovators on the regulatory side. We look at what the larger players are doing, and similar like BlackRock, for example, is using their like BIDL as a wholesale. So, and then when they move in response to like changes in the legislative and regulatory environment, then we're going to move after. So like we're not that's not our core competency. So the way it works now is to mint and redeem. It's a very strict KYC, KYB, a full scrub, and you do it either with us or you can do it with our partners like Standard Chartered, Libera, for THBill, for example. And then once it's minted on chain, then it's a permissionless token. That's when it integrates with the DEXs and the Borderland platforms and beyond. So that is the part where you can have no minimum, you can have self-custody, you don't have to trust anybody. So that's where also you can get large numbers of retail holders. So we're not like KYCing 4,000 or 80,000 retail holders. They buy it on chain. We also, we from the beginning, and a lot of kind of RWA type players, don't include the U.S. So we actually geofence the U.S. out, just out of abundance of caution. Even though in the current regulatory environment, it's like pretty okay. But again, I would wait until the larger players do it, and then we follow them. So obviously we have Clarity Bill was supposed to be passed by now, so it was like a little bit stuck. But they got the compromise on the stablecoin yield. So we're not even trying to be what's defined as a payment stablecoin under the Genius Act. We are sort of an investment product. We're not trying to compete with US dollar in that sense. Even though you can use, of course, THUSD and THBill for payment, you can send 3 cents to somebody who can do micropayments. It's good for agent, like AI agent payments. Obviously, AI agents are using already. When you look at agents that can trade, right, or that can do some kind of a financial transaction, like go shopping for you, it's always a crypto wallet because AI agent cannot open a bank account, and you probably don't want to give access to your bank account to an AI agent. So it's possible to do a payment, but it's not like a Genius compliant payment stablecoin. So it's an investment product. I would say for traditional products like gold on chain, treasuries on chain, this kind of a basis trade on chain, main value is outside the U.S. because people in the U.S. they can access it through their brokerage account. I would say THUSD is actually interesting because there is no like ETF that gives it the strategy at low cost and low minimum. So that product, THUSD, has value even in the developed markets like US. So certainly when the legislative situation clears up, we'll be looking forward to offering it. And right now we actually might offer it in the US also, but we would do it also under Reg D, which is accredited investors. That's how like Securitize and other players do it. So for now, if you want to offer it in the US, you have to you file this. It's not a full registration like a public company, but you file this like Form D, so it's sort of a mini registration, and then you have a holding period, and you have to be an accredited investor. So we might go that route, but for now we're focused mostly on chain capital.
And talking about THUSD in particular, if you're saying that giving THUSD a payment utility wasn't really the main objective here, but still you opted for this dual token model, right? Where you have THUSD, which is a non-yield bearing token, then you stake it and you get yield on top of, was it STHUSD, right?
Stakes, yeah. THUSD.
So what's the reasoning behind it? Because I've been observing the market for quite a while, and a lot of players definitely follow this model. I think Athena was maybe the first one to have implemented it. Then USDAI is a large example, but USDAI actually does plan a payment utility for the unstaked version. So what's your reasoning there? Is it more on the regulatory side of things?
No, so I think it's the same mechanism you described, so that it can be yield-bearing stablecoin, so it can maintain stable value at $1 and also pay you yield. So that's why so you put in $100 of THUSD, you stake it, you get so you put in, let's say, 100 worth of USDC, right? You buy THUSD with it. Then you can stake THUSD. You get 100 of staked STHUSD. Then STHUSD starts to accumulate yield. And then when you're ready to redeem, you get the same number, you still get 100 STH-USD, but they're worth more. But when you redeem, let's say a year later, and it's 5%, right? So a year later, you still get 100 STH-USD, but the price of STH-USD is now 1.05. So when you redeem, you get 105 TH-USD. So TH-USD is still a stable coin, but you're getting yield that way. So that's the same mechanism, like you said, that Athena.
Yeah, no, that I completely understand. But the question is, why this additional step? So why couldn't you just launch the stake version, the only one? Just as Syrup USDC, for example, that's, a non-rebasing like value accrual token, and they don't really have this stable coin-like version. So what was the
Just have the investment product right away.
Okay, see, so on the regulatory side, that's the main reason. Okay, clear. That's
Yeah, no, I think it's useful for people to think of it as sort of something that, holds the value of a dollar. It's like easier on-chain accounting. I think it maps better with like the EIP standards. I think it's the 4656 or whatever. Don't quote me on that, but yeah, it's like it's much easier on-chain accounting this way.
Yeah, 100%.
But in general, yeah. So THUSD, for example, we are working with a bunch of exchanges and fintechs to use THUSD to power their earn programs, right? So when you're not trading, when you're not sending payments. So the two primary uses of stable coins is like collateral for trading, the settlement asset for trading, and also payments. So when you're not using them for either payments or trading, you want your idle balances to be earning a return, right? So the first step is, of course, at the minimum, you get the risk-free rate through T-bills. The next step is you can earn a higher rate with still minimal risk. So we would be powering these types of programs. So again, this is not necessarily the payment is not the primary use case, although you certainly can, you can send to Kaisa the THUSD as a payment. You don't have to convert it to USDC.
Yeah, no, I definitely will. Iggy, but I think we haven't really covered.
She would be happy to receive it.
We'll check on that. But again, I feel bad because we haven't really covered, in depth the various strategy that you're trying to put on chain, which you already are successful putting on chain. So can we talk a bit more about? Okay, let's start with THUSD. So this gold carry, can you explain a bit more to our listeners how it works, what's already implemented, what's the current composition of stake TH USD, and what it yield at?
Yeah, so we start with TH Gold, right? So this is the first gold on chain or off chain anywhere in the world that's accessible to the public, right? Not just accessible to bullion banks or like massive investors to like hedge fund strategies or like the market making desk. It's the first gold that you can simply buy, just like you would buy any token or buy any ETF or any stock that pays a yield. The yield is generated by leasing the gold out to people, businesses that actually need gold in their operations, such as, for example, gold refiners and especially jewelers, right? So gold did nothing for like 11 or 12 years since like 2011. But in recent years, it has gone up, it's gone down. It's the implied vol and the realized vol of gold have been really high, so gold has been very volatile. And for gold jewelers, they're not in the business of speculating on gold price. So if they fund their inventory is worth a lot, right? In the jeweler, right? You have a bunch of gold in there, and it doesn't turn over all that much, maybe 2 or 3 times a year. So funding the inventory is a number one thing for gold jewelers. And if you get a regular bank loan when gold is at 5,500, and then in 2 days gold goes down to 4,700, then suddenly you are like underwater because you have this gold inventory that has come down that is worth less than the loan. You could literally go out of business. So now the gold jewelers prefer to borrow in gold as opposed to borrow in dollars, because then they can focus on making the jewelry and selling it instead of like taking this like massive basis risk. So That's where the gold leasing comes from. When we lease it out, we retain the title for the gold. So, and then as soon as they sell a piece of jewelry, they have to replace it with raw gold right away to maintain the balance. And in fact, all the jewelry, they have like RFIDs on them. So there's a whole like structure that's created in order to make sure that we always know where the gold is. So in the case of like, it's bankruptcy remote. So for example, if jeweler got, and by the way, it's done with very, very mature jewelers that have been around sometimes for 100 years, and they're like some of the biggest in the world. So kind of unlikely that they'll go to business anyway, but if they do, this is the most senior claim. We just come in and simply take the gold because we still own it. It's like when you lease a car, right? You can buy a car and you can finance it with a bank loan. Then it's your car, but you have to make the loan payments. Or you can lease a car from the dealer, in which case they still own it and you're renting it just like you rent an apartment. So if you stop making payments, it's very easy for them just to take the car because they already have the title for it. So similarly here, even the most senior of all the bank loans they have is still going to be junior to our claimant gold. So that's what makes it super safe. So that's how the native gold yield is generated. Again, this is the first time, certainly first time somebody is doing it at scale. And then that becomes
Actually, sorry for interrupting. The token is actually backed by gold. That's an important thing to understand.
Yes, it's backed by gold that is always owned by basically the token holders.
Yes.
Through like our tech. So the gold is always there. It's being used by other people, but we still own it. The token holders still own it. So that becomes a building block for THUSD. THUSD. So now TH gold is Delta 1 long gold. THUSD was short the equivalent amount of gold on the CME, which is the largest the largest futures exchange, certainly the largest futures exchange for metals. And then now we're no longer long gold. It basically becomes a stable coin at that point. Now, why do we short the futures? Because gold typically trades at contango. So when you go forward into the curve, you see higher prices. And then every day they tick down and down and down. And eventually, when there's a delivery date, they become equal to the spot gold price. And the reason for that is just the cost of capital. So otherwise it would be like a riskless arbitrage. So we harvest that roll yield or contango yield, so that stacks up on top of the gold lease. So now we have, let's say, 2.5% from the gold, and then where the contango yield that varies, it could, vary from 3 to 5%. It depends on the market conditions. When there is a run on gold, there's like in January, there was a squeeze on spot gold. Contango was less, but typically it's more. So if you look at the back test from last year, the average yield on this combined strategy was 8.3%. So there's quite and again, the only risk there, so the risks are very small, right? So the risk is that and by the way, there's also on the gold leasing, there are 2 layers of insurance. In addition to like all the security, of course, that's audited and cameras and security guards and whatever, the jeweler, of course, has the insurance policy. And then we and our partners have another second policy that covers things that their policy doesn't cover. So there's like the gold lease is, again, is quite safe. And then on the shorting of the futures, once we short the future, the return is locked in. So the only risk there is that we might be realizing slightly less return, because the contango, like back in January, was low. But the January was extremely unusual time because people went crazy for gold, and there was usually they were like buying spot and not even caring to buy the future. It was basically a shortage. It was called a convenience yield in futures trading. There was kind of a squeeze on spot gold, but in general, contango will give you at least the kind of the risk-free rate. So right now, for example, we're already started deploying, and we're locking in like high single-digit rates.
It's around 5-ish%, right? Currently yields at 5-ish or something.
Sorry, could you repeat, please?
It currently yields at around 5% now.
Yeah, so we're guiding the market to 5.5% for TH gold, just to be on the safe side.
Okay.
But
And
it's a very variable yield. But the sort of 5.5. I mean, the range last year was between 5 and 11. So we're guiding to like kind of almost the worst case scenario.
yeah, I saw that you're marketing like 8% for last year, like run internally.
Yeah,
So
so I think
yeah,
yeah, I would say we're marketing 5.5 just to be safe. I think
I mean,
that
you do
yeah,
mention the last year's yield, which
the
you
back
managed
test,
to get.
yeah,
Yeah,
there's
internally.
no yeah no guarantee that
Of
that this
course.
year will be the same. Yeah, I'd say 5.5. I'm pretty comfortable with, which is still a lot more, right? The treasuries is 3.6. So the 5.5 is really the magic number because if you look at like Maple and various like Borderland platforms on chain, the yields are like in a 4.8 to like 5.1 range. And this is actually for risky loans. This is not treasuries. Obviously, treasuries can only give you what the Fed funds rate is, right? Or the 3 month, the short-term T-bills, or the 4-week T-bill, which is like 3.61, 3.65, something like that. So these are backed by actually risky loans, usually like crypto-backed lending, loans to market makers, all that kind of thing, and they only give you 5%. This strategy is sort of it's a one specific strategy that we can explain. It's not a black box where say, oh, we lend it to market makers and who knows what they do with it, or prop trading desk, or we'll lend it out for people to borrow against their Bitcoin, but it's like not fully transparent what like loan to value is, all that kind of things. It's like here is quite transparent and it's a high yield. The yields is something we should probably touch upon. The yields DeFi yields have really come down on chain in recent years. So this is part of our vision is we wanted to bring yields from TradFi that are, TradFi, right? It's a $600 trillion of financial assets there. Crypto is, 3 trillion or so. So this is a, more than 100 times bigger industry. So it's much more scalable. Part of the reason the yields have come down on chain is because there's like less bullishness overall. Fewer people are interested in trading with leverage, but also it's a relatively small thing. So TradFi is almost infinitely scalable compared to on-chain. So that's why bringing yields from TradFi into it. Gold is, for example, a $35 trillion asset, roughly speaking, and current value. So gold alone is like 10 times bigger than all crypto assets put together. So it's much more scalable to bring them on chain. So that's kind of our mission there. Back to giving on chain capital access to these types of financial products. Right now, focused on yield specifically.
Yeah, I mean, I really wanted, to go as deeply as we just did, because I think what you're building is really unique in terms of this like combination of proprietary assets that you're launching, right? So again, it's not just a tokenized T-bill product; it's a set of products that you're also like bringing together and making them work together to offer something very unique and very differentiated from any other competitor out there. At least that's what I see there, and that's what I actually just heard from you, Iggy. But I think it's extremely important for an average retail investor to get this full picture and understand where exactly to test all these products. So can we like also wrapping up because I think we've really already over the time that we've set for this meeting. Can we briefly cover like where exactly these assets are available to broader retail investors at this point, where to get them, on which platforms exactly, so that people can just go and test it? Because I think a huge problem in the market is that we continue talking about RWAs and their abundance nowadays, but very few people unfortunately go and actually test them.
Yeah, no, I think I mean, I'll have to probably get back to you because we're building that availability now. So
Mhm.
I don't know if I have the full answer right now, but I mean, it's going to be, let me try let me
I,
restart
I,
the
I can
answer.
I can
Yeah,
help because I tested it all, so we can do it together. So you start.
it's going to be available in sort of, the goal is uh, Ethereum, of course, right? And then we're talking to multiple chains, and it's going to be over time available on multiple chains, multiple dexes where you can purchase it. So the vision is to make it available at all the major places where liquidity lives on chain.
Yeah, and I think like the fact that you've been building it for how many years already? Over 2 years.
Well, the TH Gold has been in the works for almost a year,
Hmm.
and then the THUSD is it's been several months specifically for this trade.
And TH Bill?
TH Bill we launched last summer, so it was in the works
2025.
for a few months prior, so that would be like over a year.
Yeah, so I mean, assuming you're building it like in total for over 2 years already, again, I assume.
Overall, yeah, the company is more than 2 years old, so they raised their seed. The seed round was raised in early 24.
Yeah, so the very fact that you've been building it for over 2 years and it's still, well, it has limited accessibility. I think you'd agree on that with me here. I mean, pools on Uniswap, last time I checked, are relatively small. So, I mean, we all understand the challenges, right? Like
Mm-hmm.
making them truly liquid, truly accessible is a long way, but it's great that, you have this strategy from day one of making them broadly accessible and broadly available, which is great. And I mean, the only thing we could do is just wish you luck on that path.
Yeah, also these like the yield products, you don't really need to trade them all that much, right? So when we launch TH Gold as a standalone product, when we launch, tokenized index or other things that have directional movement, right? So they're like delta one, their liquidity becomes much more important because they move in price a lot. The goal with THUSDs is, for example, the canonical use case is powering the earn programs for exchanges and fintechs powering earn programs for chains, right? That payment chains, for example, when you're not using the capital to pay, you want to make sure that it's earning a nice yield. So there, the goal is you purchase it and then you let it, let it sit there to generate the yield, and you would only sell it when you have to make a payment, for example, or when you have to trade. So there's not going to be as much back and forth as you would have with like gold or oil or with Nvidia stock or Tesla stock. So you don't need to have a huge size in the pool in order to have accurate accurate price.
Of course, but what I mean here is, I mean, you need to understand where to get the asset. I'm not talking about really like active trading per se. I'm talking about where to get, THUSD
Mm-hmm.
if I don't want to mint directly, if I don't want to go through KYC, or if I'm not an accredited investor, for example. Because I think TH Gold is still only available to institutional investors, correct?
Yeah, so TH Gold right now is a building block for THUSD. So we launched it first, but in terms of like broad availability, it's going to come after THUSD. We just think right now because there's like a lot of demand for yield on chain. That's the big opportunity, and we want to like focus on one thing at a time and make sure that like the execution is correct. And then so yeah, so I can get back to you in terms of like which venues are on the roadmap to be available because like I said with THUSD we'll launch on like 20 different like DeFi protocols pretty quickly. So and right now THUSD is sort of in the literally like the DeFi team and the engineering team is working on the things right now. So this is going to like dramatically become more available every week.
No, that'd be absolutely amazing. Because again, I'm very much a proponent of, people going and testing it, and even if we're talking about small checks, it's still, I think, very useful experience.
If you could maybe, talk about, well, we did cover, the imminent next steps that you're looking with these making the products more available to wider, you know, customers. But what would success look like for Theo in, let's say, 2, 3 years time? And if you can you add like numerical success?
Yeah, so I think even by the end of the year, we're targeting a billion, a billion and a half of TVL, mostly with THUSD. And then in 3 years, we're targeting 100 million in revenue for the protocol, and probably more products, like bringing other. And it's going to be a mix of. So the ultimate goal is to have. This is what gets me excited, right? So we started the conversation by saying, "Hey, why did I become a builder again?" So in the short term, it's a lot of the family offices in Wales that are investing. Like maybe 2/3 of the capital comes from there, but it's a large number of small retail checks that I'm excited about, right? Where you have a farmer in Thailand can invest $1 and just start learning how to invest, start building wealth the same way that you do with a fancy private banker. So over time, like a proper wealth management platform, but on chain. So we can come in and you can get access to what I call cheap beta. The beta always has to be cheap, right? So gold, treasury stocks, you have to be able to buy it at a very minimal cost. And the protocol should also charge a very, very low fee, if any, in order for you to get in. And then the second part of the good investment portfolio is alpha, right? And this is where we plan to bring these trades like the gold cash and carry trade. Right now, we already have trade finance as part of the diversification strategy for THUSD. We're looking at very actively bridge loans for like data center power infrastructure, because AI is like super hungry for electricity. We'll save that for the next podcast. So basically finding areas that are right now underserved, and then bringing it on chain and make it available. So basically a proper wealth management platform on chain with a mix of the basics, right? Your stocks, your commodities, bonds, treasuries, super low cost, easily accessible. And then, I would say proprietary or hedge fund like structures that allow you to generate higher yield that we actually run ourselves. So it's a mix of partnering with trillion-dollar institutions, tokenizing their funds, their products, making it available on chain, and then also having our own strategies alongside for the alpha portion.
That's a really
Yeah.
grand vision. Absolutely love it. Building a vertically integrated structure and then bringing all these products together and, making some magic around making them work together is really the right way to do
Yeah.
it. But Iggy, yeah, go ahead.
Yeah, and right now, if you look at like some leaders in the space, they usually have like they have treasuries and they have tokenized stocks, right? It's just two parts, right? So you don't have the proprietary alpha, and you don't have commodities, and you don't have many other things, right? So there is really, as far as like having a full wealth management on chain, there's nobody's really doing it. Most of the tokenization players, they focus on one specific asset class. You have gold, right? You have the Paxos has gold. Tether has a tokenized gold, just a gold, right? And then of course, so let's say they have stablecoin too. So now you have gold and cash. Again, that's not enough to build a proper portfolio, right? To save for your parents' old age, for example, or to save for your kids' college education. So the 3-year vision is to have all the major building blocks in one place. No minimum, available anywhere in the world, 200 countries, and 24/7.
And Iggy, very, very last question, which I think is increasingly important for the builders there in the space. Because again, you raised that particular angle a few times, right? That you're back to building and you're very much into it, and you have this large vision. So, I mean, now after building the company for 2 years and after successfully closing your recent round, so now the total funds raised, I think, amount to 20 million for Theo, right? So my question is, what I'm seeing currently in the market, even though the RW tokenization trend is obviously still there. We very much believe in the thesis. Everyone's trying to tokenize everything, etc., etc. But the problem is that it's become quite hard for early stage teams to raise, even if they are building in the RWA space right now. So if you were to give maybe like a piece of advice to builders that are currently trying to raise for a new RWA product, what would that be? Because again, the situation was pretty different when Theo was raising the first round, because I think you did raise without any traction, right? Even before launching TH Bill and showing that you can actually bootstrap to 100 million in TBL. Now it's very different. So what would your advice be to builders, I mean, today in May 2026?
Yeah, so first you got to like separate. So we raise seed and we also raise Series A. So as I like to, so I've been a VC and tech investor for like 2 decades. So the investing in seed is art. Investing in Series B and beyond is science, and investing in Series A is somewhere in between. So when it's seed stage, it's basically all about the team, right? So because the team had a track record in building the prior crypto protocol, that they were able to raise the money, and then for Series A, you have to show, the product market fit. At the time, the main product was actually more of a on-chain carry trade, like the funding rate arbitrage, which again, if we go into, that's something we have built, and if yields go back to being decent in that funding rate arb, we'll definitely add that to our array of product. The beauty is like right now, when we're in a somewhat bearish market, you have better better luck bringing RWA yields on chain. If we're going to bull market, the on chain yields will rise, and we'll add that to our product mix. So then this, by the time it was Series A, you have to show some TVL, show some traction that was already in place. But in general, I would say that the only, it's not building starting a company in a bear market or raising money in a bear market. That's not a bug. That's a feature. If you look at the great tech companies, the trillion-dollar companies throughout history, almost all of them started during bear markets. Very, very few. You sort of, during the bull markets is generally speaking when you harvest, you scale. But by that point, if you start in the bull market, then you're already going to be behind the people that started building during the bear market, and they already have a lot further traction. So it's actually, you should be very excited about the fact that it's hard to raise money, because if you do, there's significantly less competition. So right now, crypto VCs, they still have huge funds, so they're hiding in its later stage deals that are further de-risked. So most of the capital in bear market, it goes into like the Series C, or the companies that are like what I call Web 2.5 companies that are not fully in chain, like centralized exchanges, custodians, which are basically normal, tech companies that happen to be dealing with crypto, but they're not like truly on-chain protocols. So there's very little capital that's left for true startups. But if you're able to raise, that means you have significantly less competition, and you can get a head start for when things actually come back. So I'd say the number one advice is actually be excited about the fact that it's hard to raise money, because that means it's hard for everybody. But to raise the seed, it's all about the team. So I'd say if you feel like your team doesn't have enough experience of a track record, then you should sort of work for one of those like later stage companies that are still raising, because they're like more de-risked than startups, until you build up enough track record, and then you go back and you raise seed money. Because seed, you don't have numbers to show. It's like I said, it's the art, and people are going to invest based on the feel, and primarily it's about the track record and pedigree of the team.
I think that's like a really great takeaway. I think we just recorded the longest episode ever for Onchain, honestly. But this notion of that the bar is higher and that's actually a good thing has been echoing through quite some different people. So, and I totally agree with that. That the fact that it's harder just brings up more quality, and that's what we actually need in space.
and I speak from experience because I built my company, Location Labs. It was after the tech bubble burst, the original .com bubble burst, and I was building it in the early 2000s when I was like, I started it still at school, and then was building it in school and then right after. And it was like a nuclear winter in Silicon Valley. People were moving out. We were the only software company in October of 2001 that raised more than $5 million Series A. The only one. Imagine that now you have this happen every hour with much, much larger size. Because it was also after 9/11, so basically everything just froze up. So October of 2011, like people completely stopped investing. And of course I had to invest. The one downside, when you're raising money in the bear market, you take massive dilution. So, raised relatively small amount and took very massive dilution, but it's still okay for if you focus on building and delivering value, eventually you make it up. But for example, the war for talent during the bubble times, it's very hard to attract engineers, very hard to attract people. When I was building, I was getting the top tier, the world's best PhDs in computer science, algorithmic developers that I could hire anybody I wanted, because very few people, only large companies were hiring, but some people just want to work for a startup where it's more exciting and more flexible. So there's a lot of advantages there. But yeah, so building during the biggest tech downturn ever was not fun, but I think it so the evidence is there. We ultimately ended up growing to I think when we sold the company, we had 40 million of cash flow profitability.
Iggy, I mean, we'd love to continue. We'd really do it for ages. You see,
We
it's
should
already
do a second part.
It's already dark here in Dubai. Seeing my image.
The sequel. Yeah.
Yeah, sure. Iggy, thank you so much. That was really insightful, and we'd definitely love to make another part.
Great. Yeah. Well, it will be like Star Wars, Empire Strikes Back or something like that.